As I'm looking at my portfolio, I realize that I'm a little bit behind of where I think I'd want to be. And so now I'm in a race to figure out how I can turn a $10,000 investment into $100,000 as quickly as possible. If I needed to turn $10,000 into $100,000 in less than 10 years, here's how I might do it. Be sure you watch this whole video. You're not going to want to miss it. Whenever I think about investing my money for later on in life, I typically always think about exchange traded funds or ETFs. They're like a combo pack of investments because they offer less risk with instant diversification, and they tend to be more liquid, meaning that I can easily buy and sell them whenever I want. Now compare that to investing in one single stock. If that company has a bad year, then potentially you could lose all your money. Now you could lose your money with an ETF as well, but it's less likely to happen because of the number of different securities that are included within the ETF. Before I start investing in stocks or trading options, one of the first things I do is utilize my one-button stock screener. This PDF document contains clickable links that are programmed to activate an online stock screener that's pre-configured with the correct settings to match your desired outcome. Are you looking for stocks that pay larger premiums? Then just push this one button and you'll get a list. Do you want a list of stocks that are moving and trending higher? Just push this button. Do you want to find stocks that pay huge dividends? Just push this one button. So let's check it out and find stocks that are in a bullish trend. I just push this one button and my stock screener returns a list of stocks that meet my criteria. And now at this point, I can repeat the process for each of the stocks that showed up as a result from my stock screener. Remember, it all started by utilizing my one-button stock screener to initially pare down the list from the thousands of available securities, that's both stocks and ETFs, into a manageable subset that I could use to go ahead and perform research. Making profitable trades like this one depends on picking good stocks. And I use my one-button stock screener every time I trade. And now I'm making it available to you. Be sure to get my free one-button stock screener. It's the tool I use to help me pick stocks for option trades. You can download the free one-button stock screener by joining my newsletter at stockhacker.com. Alright, using the results from my stock screener, I think I found a winner. It's the Simplified Volatility Premium ETF, or Exchange Traded Fund, ticker symbol SVOL. Now let's take a few minutes and take a look at the chart for this ETF and some of the numbers associated with it. So the first thing I should probably point out is the inception date. Here you can see it's May 11th of 2021. Now, as I mentioned earlier, this ETF is relatively new, right? It's only about 3 years old, so just over 3 years. So it doesn't have a lot of history behind it. Another thing to point out, here we can see the dividend yield paying $3.84, or it's paid $3.84 per year, which is 16.77%. So this annual yield is really appealing, right? 16%. Now also take a look at the expense ratio. It's 0.66%, which means for every $10,000, there's a management fee associated with it of $66 per year. Now we can see that this ETF closed today up 0.39%. And for the last 6 months, it's actually up just over 10%. And for a year to date, for the past 7 months, this ETF is up just over 15%. And so some of you may be thinking, yeah, this ETF has done well during 2023, but what about the actual last 12 months? So if you take a look at the last 12 months, we can see that this ETF is up 17.71%. And for the last 3 years, which is basically the life of this ETF, it's up 21.93%. Okay, so here's the part of the video that I'm most excited to share with all of you. And it has to do with the Dividend Calculator. It's where we get to forecast what the initial investment might actually turn into. So I've plugged in our ETF symbol SVOL, and we know the share price recently closed out at $22.89 per share. Now if I take my $10,000 and put it all in SVOL, that means I can purchase roughly 436 shares. And you can see the total investment amount is $9,980, leaving me about $20 left over. Now, if I hold the shares of this ETF for 1 year, with an expected dividend yield of 16.77, which is we've seen, and this actually pays out the dividend on a monthly basis, and I'm not going to make any annual contributions. So that $10,000 that I started out with, that's all that I'm going to put into my portfolio. I don't expect the dividend amount to increase or the share price to increase as well. And I'm not going to take any of the distributions that I receive to reinvest them. I'm going to take them, cash them out, and put that money in my pocket. So let's take a look at my returns. So after 1 year, you can see that my ending balance is $9,980. So exactly the same as I started out with. So that's the money I put in as my initial investment. But I did receive $1,673 as my dividend payment. So I took that money and I could use it to buy anything I want. So those given to me as a distribution for me to spend however I saw fit. And now let's take a look at the summary for the year. We can see that year one, for the 1 year that I owned the shares, I started with 436 shares. And at the end of the year, I ended with 436 shares. And my ending balance was exactly the same, so no changes there. But I did end up receiving $1,673 as a distribution payment for me to use however I wanted to. But now let's take a look to see what happens when we start doing some of the smart things that we stock hackers know how to do. So what if instead of taking this money out and receiving the payments for them, what if I were to use that money and reinvest it back into the ETF? So some of you may recognize it as the dividend reinvestment plan. So the money you receive as the dividends is automatically used to purchase more shares of the particular security. So in this case, I'm going to enable DRIP, which is the dividend reinvestment plan. And now watch what happens. Calculate my returns. And after 1 year, my balance is now $11,788. Well, what happened? Well, the money that I received for those distribution payments, they were used to purchase more shares of the ETF. And here we can see it. I started out with 436, my original purchase. But now at the end of the year, using those funds that I received from the distributions, folded back into purchasing more shares, my ending share balance is 515 shares, giving my portfolio a new total value of $11,788. So that's part of the power of taking those dividends and reinvesting them. Hey, time out, just a minute. I thought this video was all about taking $10,000 and turning it into $100,000. It's time to show me the money.
Show me the money.
Oops, sorry. Sometimes I just get a little too excited. Well, don't let it happen again. Now let's move on to step number 5. Okay, now it's time to see how I can turn that $10,000 investment into $100,000 in under 10 years. Well, the first thing I'm going to do is make a small contribution every month to my portfolio. Now, I'm going to do $150 a month, and that works out to $1,800 per year. So I'll add that as my annual contribution here. Then we know we saw the share price increase over time. In fact, let's go back and take a look. So we see that the year to date, the stock price has performed pretty well, 15% per year. Over the last 12 months, 17% per year. And over the last 3 years, the stock has appreciated over 21% per year. But there's no guarantee that this is going to happen in the future. So let's go ahead and use a little bit more conservative number. So let's go ahead and use 8% as the expected annual share price increase percentage. And now if we increase the holding time to 8 years, let's take a look to see what happens. I hit calculate, and now you can see my ending balance after the 8 years is over $100,000. And if I scroll down, you can see what happens for each of those 8 years. Let's take a look. So I started out year one with my initial purchase of $10,000 to get these 436 shares. And at the end of year one, by reinvesting the dividends, I ended up with 581 shares. Now, by repeating this process and leaving my dividends in there to purchase more shares, each year, my ending number of shares increased. So here's year two, where I started out with the 581 shares, and I ended with 747. Follow that through, and you can see that by year 8, I have over 2,000 shares in my portfolio. And those 2,000 shares, they're providing me with dividend payments of just over $14,000. And by the end of year 8, I have in my portfolio 2,386 shares, giving my portfolio a value of over $100,000. Now, of course, there's no guarantee that the returns that we're seeing right now will continue for the next 8 years. But using this dividend calculator, we can project what could be possible. So don't forget, one of the keys to successful investing is being able to pick good stocks. And that's why I always start out my investing and trading sessions using my one-button stock screener. Be sure to get my free one-button stock screener. It's the tool I use to help me pick stocks for option trades. You can download the free one-button stock screener by joining my newsletter at stockhacker.com.